Thursday, July 20th, 1:15 p.m. New York time. Good afternoon. This is a review of a swing trade I did. I closed the trade today. Bought the position yesterday using options on the S&P 500. These options expire this Friday, tomorrow, but I closed them today for profits. First, show you the setup. Looking here at 6 separate grids. Each one's a daily chart. These are the major stock indexes. The top left, the S&P 500. Top center, Nasdaq 100. The top right, Dow Jones Industrial Average. The bottom left, the Dow Jones Transports. Bottom center, the Dow Utilities. And the bottom right, the S&P 100. Top left here, the S&P 500 stock index is the major key index institutions want to compare their return on their performance. Inside this index are several other indexes. So these other indexes here, again, the Nasdaq, the Dow, utility, the transport, the OEX, these other indexes are inside the S&P 500. You got it? So this index, S&P 500, is comprised of several indexes. You can see how the individual performance are performing. Such as here, the top center, Nasdaq 100, it gapped down this morning. It's red, trading down. Where the Dow Utilities is green, trading up. So they all have an effect on the S&P 500. But the Nasdaq 100 and Dow Jones represent this index the most. So 500 companies, 500 stocks are in the S&P 500. Yesterday, near the close of day, about 1 to 2 minutes before the market closed, the stock market closed at 4 p.m. New York time, I was looking here in the daily chart, as well as the rest of my charts, and thinking, I think it's overexhausted. Maybe I'll go in and buy a small position of put options. Buying put options is a bearish strategy. And when you buy options, buy calls or buy puts, you need to be directionally right. That means the underlying needs to move in your favor. So I was charting this index with the SPX, but I bought the stock ETF SPY puts. So yesterday, we made a new high for the year. Look at this little tiny candle, little body. There's a doji. That's a kind of candlestick, doji. Top of a trend. That often means whenever it's on top of a trend, it means reversal. Also, doji by itself often means indecision, but the top of a trend, as well if it was at the bottom of a trend, means potential reversal. So I took risk, put money on the table, small position. And this morning, you see right now, well, this afternoon, the daily candle is red, lower, 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 high. Doing retracement as a big candle. And look at this. The Nasdaq 100 gap down. See, it opened lower than the low of yesterday. That's a gap. Where the Dow Jones, it's being the good kid. It's showing off. It's green. It's hot. It's making a new high for the year. It's interesting. And it's saying the Dow Transport's new high for the year, but not the other ones. Let's go look at the stock ETF now. So on the top right, stock ETF symbol SPY. Daily chart, same thing, just like the SPX. Bought my puts here yesterday and closed them this morning. Looking here on the 30-minute chart, zoom in. So I bought them. Actually, that doesn't represent. I bought them here yesterday near the close here. And this morning, zoom in a little bit more. Actually, put this on 15-minute. There we go. So I closed them here near the low of the day. Not knowing that was the low day, nor the market is not closed yet today. So don't know if that's certainly the low of the day yet. It could go lower. But the volatility was fast, so I closed into profits. Well, let me show you the option chain. This is the underlying SPY. This is an option chain. And the left side are calls, the right side are puts. And I bought the put yesterday. Again, the contract was the 21 July. That means it expires 21 July there. The number one had one trading to the left. And here's the puts. The strike I bought was 452. And right now, if you want to buy it for $70, $69. Well, I bought them yesterday, $51. And this morning, I sold them for $99. Made a profit. There was more money on the table because it went lower after I got out. Yeah. But again, I didn't lose. That's a good thing. So one can stay in this trade till tomorrow because it doesn't expire till tomorrow. It expires tomorrow at 4 p.m. But actually expires at 4:15 p.m. for stock indexes. I actually trade for additional 15 minutes in the option exchange for calculating reasons because there's so many instruments inside the index. Doesn't mean you're actually going to be able to get a trade in or out because the spread's typically a little wider. Yeah. Another trade just went off, another alert. So putting this down to 5 minutes, well, one day, 5 minutes. So in the morning, the market went green, went up, up, up. Yep. So it went against me. So what I paid for it actually melted away for a while. And where I mentioned I paid $51. So they went against my position. Remember, you're buying, I bought put options. That means I need the underlying to go my direction. So this is the underlying, SPY. I need to go lower. It didn't go lower right away. It went up. And then the yellow candle, inside candle came. Panic selling came. As panic selling came, the price of my option went up higher, higher, higher. I already had a working order on. So even if the power went out, the internet went out, I still had a working order with my broker, would still fill it. Yeah. I highly recommend you trade, use real working orders. Don't guesstimate and wait for it to occur and physically close it. Nope, have a working order. So I watched it trail down. A few times went up and finally closed. Worked out for me. Good. It could certainly go lower, but I said, look, thank goodness I closed it because it went against me. Let's go back to the option chain, 252 strike. Yep. So the thing is, if you don't close these options because they have expiration dates, remember I mentioned this expires tomorrow. These are premiums you're paying or you're collecting. They melt away. They're like insurance policies. They have less time, and part of these prices comprise of time. And here, time is decaying. So again, needed to move fast in my direction. I could have bought today's options. Here we go. This is today's contract. Remember here, top expires today is 0. So 0 being 0 to eat. Look at the 452. There's only $13 left if I want to buy it. Again, spread is tight. That's another reason I do this on these underlining because the spreads are tight. So putting this here on the right, the daily chart, I was bullish enough for a short-term trade. This is a swing trade. And these expire tomorrow. The point is, I'm not considering this to necessarily go down for 7 days, 3 weeks, or 3 months. This is a swing trade, but it's a short swing trade. There's only 2 days. Bought them yesterday, closed them today. There are swing trades that could go on for weeks and months. But again, my short-term trade here was looking bearish buy for short-term move, making money the same week, not sitting on hands for months or years, because these are options. They're financial instruments for trading, not sit on hands. Big difference than doing the equity market. So at the end, let me put this on the SPX to show you. The SPX here, the actual cash index. Zoom out. As it goes lower, I'm going to watch levels that I selected, opportunities where I may become bullish, and bullish be buying call options. But I'm watching the candlesticks, I'm watching price levels and actions. And when I decide to come buy call options, it's going to determine what calendar today is and what strike, so contracts, these are contracts. But when I actually come buy call options, let's open one up, let's just say 7 days, that's 7 days. I'll be looking to buy options on the call side, extend this up some more. And then the call side, same thing. When you buy options, you're buying them on the ask. And when I select the strike, buying it at the premium, paying for it, I'll need the underlining to go higher. The underlining being this. So again, because I traded with buying puts, I needed this price to decline. As this declines, these premiums went up. So this, when you look at the daily chart, it's not that much panic. It's a small trading range, right? We go here and we move. I'll use some of this. If we look at panic selling, see this big red candle down, big red candle down, panic selling, panic selling. Small red candle, not much panic selling. That was big panic selling. So again, good that I closed my trade because the bears may be running out of energy and might actually turn around sooner. That's part of the way I look at trading. And this is a swing trade. It was not a day trade. Nothing wrong with closing a trade early to take a profit.